For the SC, does the first candle have to be smaller or bigger than the second? I think, well, it would make a lot of sense when it is actually bigger, right? It will make a lot of sense actually when it is bigger, because bigger shows volume, right? Bigger shows you a lot more volume. But if it's big, it really has to show you that it is taking out liquidity, right? That's the most important thing actually, because I don't think I ever look at the fact that it is big or small. I don't really think I pay attention to that. But what I pay attention to is, did it take out liquidity? Does it make up structure? All right, those are the major important things. I don't really, it could be small, it could be big, it could be anyhow. All right, but what's really important is making sure to see that it takes out structure, it takes out liquidity and creates structure. Right, that's very, very important. Because now take, for example, this one. For the question you just asked, take, for example, this one, right? This is smaller compared to the bullish move, okay? And what do you see happen? There was a test of it, right? A bullish test. So even if you broke even or anything, actually it doesn't really make any sense to buy here anyways, because if you looked at the order flow, right, you would see that this base was in control and that made price fall. And look at the next SC. Okay, now look at this one. This one is smaller compared to this, but this, what you have is liquidity is being taken, right, which is this liquidity right here, right, and that's why it makes sense. So what happens is price comes into the body of it, you have a rejection, price dumps. So at this point, I don't think you're looking for buys here. It wouldn't make sense. So if for anything you're looking for buys, you could, this was the last candle that was formed, and so therefore that would be the SC. So this one is bigger than every other thing, isn't it? But pay attention to why I'm picking it, and then I can use this as liquidity and then see price action happening here to know if I'm going to buy or not. All right. So it's all of those things, just making sure you pay attention to structure and liquidity. All right. They're going to help you out. All right. So top analysis for USD. I'm starting off with the DXY because it's going to help you understand what to expect on the EU as well. So looking at the monthly structure, let's go even on the 3-month structure or the 6-month structure. Let's go higher time frame. All right, so this is the six-month time frame, and on the 6-month time frame, I'm paying attention to structure. This is a very good example of a complex pullback. Right? So you had this high, you had this low. Okay, what do you see? Less than around 50%. What happens? Price goes all the way up. Complex pullback and dumps again. All right, structure here is bearish at this point. So you have high, lower high, you have a lower low, right? You have a lower low, right? We're bearish. Now, this is another example. We could say that EU is making a complex pullback at this point. We could say so because this was the last structure point before we had a significant pullback, and this never came 50%, isn't it? We never had 50% of this move at all. Okay, and now the next one, we never had 50%, price never came up there, and that's why it's giving room for the fact that we needed what? We needed a new a discount price or a premium price, whatever you want to call it. All right, so now paying attention to this, I understand two things here. This was the last holding supply area, and this was the base. Okay, what I expected demand to continue. If at all we're going to go bullish, okay, we expected the fact that price should have come here and then buy, but that didn't happen. Supply and control. And you see why, even within the same environment, the same point of interest, we're having sells. Okay, not the source. Now, I could find out the exact base that broke this demand and use that to understand why this is a sell, and maybe understand maybe why we could have the dollar continue to be bearish at this point. Okay, I think you said I can even say on this time frame, which is the DBD, but this doesn't really look like a very nice looking base to me. And that's why I'm gonna have to check a different time frame. So let's check out the 5 months. No base, 4 months. Still no base, 3 months. Right? Now, within that area, this was the last base right there, isn't it? Now, I'm going to pick out that base, right, as my what? As my supply area. And what you see, the moment we test the proximal area of the base, we sell. Now we've made another pullback up there, but it isn't sustained. Even the candlesticks close below this, and then you have bearish price action at this point. So there's a very high chance that the dollar can continue to drop, because at this point we are very, very bearish and there's no sign of bullishness, isn't it? All right. Now, the very, very interesting thing here is I can also try to find out a complex pullback for this swing, because this swing, when we made the first high, right, we never came to the 50%. When we made the second high, we never came to the 50%. When we made the third high, and that we just tapped off 50%. So at this point, what are we going to do? Right? I just need a very smart answer right now. What do we anticipate the dollar to do? Exactly. Right? We're expecting a discount price. We're expecting a complex pullback. All right. Thanks, Peter. That's exactly what we're expecting at this point. All right. You guys are now seeing it, isn't it? Everything that I've just told you guys is what I'm using right here. I'm not using any other thing. I'm trying to keep it simple and precise. Okay. So now I could, with that being said, all I could take out from this now is understanding that I could have sales show up in the market, isn't it? And so therefore, I could then anticipate price to fill up all of this imbalance and thereby have this area as the next possible point of interest. I just want to see price action, because at this point, when we pay attention to this time frame, was on the 3-month time frame, isn't it? I think let's go back to the 6-hour time frame, 6 minutes, 6 month time frame. Let's head back there. I just want to show you guys something very interesting. Okay, so I've identified holding supply. I've identified holding supply right there. All right, this is the next holding supply. Now, this holding supply, what happened? What can we see from there? This base was tapped into several times, isn't it? And then what we did was, as soon as we created this next structure point, we broke through it with a lot of volume, isn't it? We broke through with a lot of volume. Now, if you want to see it a lot more, go deeper into time frames. So on the 3-minute time frame, or 3-month time frame, this was the last base right there. And this base also took out this liquidity, and that's why it makes up a very good base. Now we see the rejection. We see the rejection. Now there is a reaction and a break out of it. So what was the last thing created before we broke out of it? All right. And then we start to check into the fractals. 2-month time frame. You don't see no base. 1-month time frame. You then see this base. So this is the first base we see, isn't it, at this point? And so we can say that we want to sell DXY all the way down to 87, right, at this point. That's something realistic at this point. Wouldn't you agree? Because we've just broken the holding supply significantly, which also makes up structure, right? And the last structure point is this one. Also, even within this fractal, we have this last base. Although it didn't really take out any liquidity, or maybe it did, but it created structure, which is very significant. All right. And then we had this base created just before the breakout. Now, if I want to see it a lot more, I can go even in weekly and be as precise as I can. All right. Now, on the weekly, what do I see? I see this last SC, and this last S is actually a base anyways, because it took out liquidity, and that's what makes it a very valid POI. All right. And so now I can say that I've successfully had or anticipated where I expect DXY to sell to. And so for any reason, I don't expect to buy DXY because we expect sells. Get it? And this is obviously liquidity because it never came to 50% of the swing. I can now apply the same thing to USD, isn't it? And I understand what I should expect. So let's go into the USD. All right. So applying the same concept to this now. Yeah. Applying the same thing. Then we should anticipate bullish breakout of this high, isn't it? Let me see if we made a 50% move. Yeah, we did. Kinda. And let me see if I can apply the 61.8 thing here. Okay, I think it is applicable because we never actually went past it. Well, I'll backtest that. All right, but at this point, based on what the XY showed us, then it is we should expect the same thing from EU, which is anticipate breakout above this high. So if you're still in EU, it makes sense to hold it still because we're going to continue to go higher. We have about 400 pips more to catch, and that's going to skyrocket our risk reward, and there's no reason to overtrade or anything. You just got to stay into the trade. No sense to sell below equilibrium. Exactly. Right? Exactly. No sense. Let's check out the 3-month time frame just so we can find the base or the area for EU as well. Let's check out the monthly. Okay. So on this one, we would say this base, right? Why does it look different? Hold on a second. You guys see what I see, isn't it? It's not like I'm the only one. But anyways, let's have it that way. Check out the weekly. Yeah. We had this, I had this base, then I had this demand was bullish. The price at this point comes back to break it, and then you have this base as the last base. And so therefore, that is our supply level. And we have a mitigation, and the price drops. So we can say that is where we should expect EU to get to at this point. Or even further above. But yeah, that's also going to make up a complex pullback because it's higher up above 61.8. So yes, that is a discount from your price. So I saw a rejection here on Friday when we ended up the week, and I also shared the price action with you guys, seeing how price got into the zone and then rejected it, and then you had like bearish price action at this point. And obviously that is a counter trend, isn't it? Why is a counter trend? Because the trend is still bullish. And so there's a very high probability that we could have buys present themselves again. And so therefore, that's why I have this area as a possible re-entry opportunity to keep on buying EU USD. So here's the thing, all right? This is the last structure point, and here you can see it is signified as a holding supply area, right? And so you have this last base here before a breakout. But then this base doesn't really give me a lot of information, and that's why I decided to go within the fractals. So I went to the 12-hour. The 12-hour, I see it as an SC. Now, ask myself, did this SC take out liquidity or did it create structure? Now, I can see a lot of information here, and so I go again into the fractals. All right, check out the 8-hour time frame. I still see that strong bearish momentum before bullish momentum. Still doesn't really say that much. Check out the 6-hour. And then I see something very interesting, which is price rejects off of the last base that broke out structure. And so therefore, it makes this SC a very key point of interest, right? Or this area actually a very key point of interest. But The thing about this SC is the fact that it has been tapped, it has been tested. You would see on the small time frame, the 1 hour, right? So right here, okay, right here, this is the area that created the structure, and you have another holding supply within the fractal. The last bases were here, broke the holding supply level. We have demand. This was a nice buy entry opportunity that happened after the Asian closure, and then price approached to go bullish. So here's what I captured. I captured the fact that this is also a base, and this base was the last base formed before we had this clean bullish movement breaking the holding supply area. Not just the holding supply area, actually, but the structure as well, which is this particular structure as well. So this base is kind of like very significant, and that's why I have that area as a possible point of interest. So what I'd wait to see, obviously, is not then to go ahead of the market first. I'm just going to watch out for price action, see what price does in here. If I see holding supply within the fractal is broken, then that's going to tell me that, oh, there's now time for demand to show up in the market and it's now time for me to buy. Then I buy and anticipate where? The next zone, which is obviously this area. Make sense?
Makes a lot of sense.
Yeah.
Right? So that's why I have that area as an entry point. So I'm just chilling at this point. And obviously, see, I have an alert set as well. So I want to know when price approaches that area. I'm not really interested in the pullback, and I'm never going to bother myself about it. I'm just going to wait and prepare for the buys. So I don't need to trade too much. I don't need to be on the charts too much. I don't need to watch anything. I'm just going to chill. Now, next thing I look at is GU. Let's look at GBUSD. Now, we understand the fact that the dollar is still bearish, and so the pound should at least gain strength. Because even right now, at the moment, the pound is also bullish, but the Brexit news and the uncertainties that are happening with the Brexit and lockdowns and all of that is just making the pound move in a very kind of like not so beautiful way, but still moving regardless anyways. Now, let's look at the higher time frame on GBUSD. Let's go to the 3-month time frame and also maybe look at the 6-month time frame as well. So what I'm going to do is just take out everything first and then look at what price action, or let's just do a clean chart. So we have some sort of confidence, right? Okay, so clean chart, 6-month time frame, right? Now, what can we see here? What is the price action here? What's the structure here? What do we have? That's what I'm looking out for. Now, structure, I have high, I have lower low, isn't it? High, lower low, I have a lower high, right? And then I have a lower low, right? And then I have this, but this isn't a complete pullback of the swing because this is less than 50%. So therefore, I need premium pricing. Right? First clue is now understanding the fact that we could anticipate a complex pullback. Make sense?
Yes.
Okay. Now, we've established the fact, and the fact is we're bullish. Right? Now, second thing is this. We have just taken liquidity, isn't it? All right. So now, for the fact that we've taken out liquidity, pay attention to this. All right. Pay attention to this. Isn't it interesting how price never violated the closing price of this move right here? Isn't it very interesting how we haven't even gone past the closing price 4 years ago, despite the fact that price went further below, or we haven't broken past the closing price? You know what this is? This is support, right? There is a lot of support right here in the market. And so for this basic reason, we can anticipate bullish momentum and then take out this liquidity. Come on now. I believe I'm busting you guys' head. Like, this is a whole lot of nuggets I'm giving you guys. This is trading made easy. Right? Because I feel like not a lot of people even remember that the fact that there is a 6-month time frame, and you can actually know what's going to happen in the long term when you look at the highest of the time frames. All right? So just something to think about, because every time frame is important, and every time frame gives you an opportunity to see what you're not seeing on a different. So it's just about changing your perspective, right? And then seeing a lot more better. That's what this is. Now, we've established the fact that we've taken out liquidity. This is a complex pullback needed, even if we're going to go bearish at this point. Now, second thing is, where is the last holding demand area? Right? Now, I can establish and say that this is the last holding demand area because that was the last structure point we had before a very clean movement of price. Isn't it? Now, let's go into the 3-month time frame or 5-month time frame. Let's now go deeper into time frame. So 5-month time frame, we have this candlestick, we have this candlestick. There's a break, price goes back to reject or block it, and then sells. Let's check out 4-month time frame. Still the same holding demand area. Let's check out 3-month time frame. All right, still the same holding demand. Pay attention to this. Pay attention to the last structure point. Do you see what we have? We have an SC. All right, that's what we have here. We have an SC because that was what last price, and that's what created the structure, the down movement, isn't it? That's last SC. Check out more fractals. 2 months. Now here you can see how we moved sideways and we created the base. That was the last base, and then we had falls. Let's have monthly time frame. Now on the monthly, this is the last SC that I can see right here that was formed, and then price went bearish. So this SC has been untapped right here, right? From this holding demand area, the SC has been untapped. Also, this broke the order flow. So at this point, this base in particular was the last price. So this base, we have bullish moves from there. Now the next one was this SC, because it also had the last price. And then you have this SC bullish move show up in the market. Actually, liquidity was tapped out right there. And then price is supposed to go bullish, isn't it, at this point? We were expecting continuations of demand, but then there was no demand. That was the last price. And automatically this becomes our next supply area. All right. I could also dig into the weekly to reduce the point of interest and then say that pay attention to the structure point, look out for which area we have unmitigated order flow. Again, this is why this makes sense, because what? To cut liquidity. All right. Now we have a retest of a what to call liquidity. So there is no unmitigated order flow here. Now we have the next one, which is this one, which was tapped in. Now we have the next one here, which is this one, which was also tapped in. And then we have the next one, which is this one, which was also tapped in, isn't it? And then we have this one right here, which we can now see evidence of another tapping as well. Can you guys see it? And then that gave us clean drop in price. Okay, so I could say that that is my next supply area, and I'm only going to keep buying until we head up all the way up there. Okay, and now you start to see confluence still within that SC area, or we can say this week to week. There is a base within this week to week actually, and then that gave the room for the rejection in there and the very beautiful supply that we have now. All right, check out the 2-month time frame. All I'm just looking for is confluence. This aligns with this base candle right here as well. On the 3-month time frame, this aligns with the SC we once figured out. And when it mitigates, most people can say, oh, you came and mitigated 50% of this SC. not really knowing why. This one, we could say it also aligns with the base on the 4-month time frame, 5 months. Also aligns with the base, 6 months. We have also aligns with the base as well. So I have that area as where I want to buy to, which is take profit, which is target. So within the next 6 months, I will be buying GPUSD because this is a 6-month candle. So this is what happened from May to December. All right. So what's the next candle going to be like from January to May or June? All right. It's also going to be something like this. So anticipate more bullish momentums coming up as we anticipate more bearish momentums coming up on the dollar as well. Am I making sense, guys?
Yeah.
Okay. So we've just done DXY, EU, and GU, and now we understand what to expect for the next 6 months, which is we're bullish on GU for the next 6 months, we're bullish on EU for the next 6 months, we're bearish on the dollar for the next 6 months. All right. So now the last but not the least would be gold. Okay. So let's have a look at gold. I've got about 9 minutes left on the call. So let me see if I can squeeze in gold into this. All right. I'm going to have to use a different chart. So do I use the Wanda? I think I use Wanda normally. Okay. So I have to add some things. Which one do I use? Let me try something. Hehe. This just reminds me of my old self. This is very interesting. We're going to find out in a bit what's happening with gold, isn't it? All right. Now, this is a 6-month time frame. It's going to be very interesting if we figure out what to expect from gold, actually. So structure and what is happening. So gold is very volatile. So looking at the 6-month time frame might be too extended. So let's look at a different time frame, half of it, 3-month time frame, right? Let's just help ourselves out here. Now on the 3-month time frame, here's this. I'm really going to neglect all of what's happened here and actually pay attention to what really happened here at this last structure point. Because now the structure says higher high, higher low, higher high. All right. So right here, the structure says bullish. Okay, so that's how I'm going to pay attention to this high. Now at this point, this was the last level, last price. Okay, and what happened with the last price? Also, let's identify a holding supply area, which is right here. Okay, HS. All right, now let's pay attention to order flow and structure from the structure point. Now, we have a rejection, a mitigation off of our base. Price comes in, the demand shows up. Let's go into the 2-month time frame. We'll see an SC. Price goes there. SC takes out this liquidity. It makes sense for why it should be an SC. SC also broke structure. And so I could say at this point, I was definitely anticipating buys, isn't it? Now, let's check out the monthly time. Okay, so here on this monthly time frame, we still have that area lined up, which is this SC. We have this base, so that's 1, 2. We have the next structure, next order flow, which took out liquidity and continued the structure. So liquidity was taken right here. All right. What it did was create liquidity at the top and the bottom. So we have equal highs here, a lot of liquidity here, which is why price took it out. and then price continues to go bullish at that point. But let's not forget that our last holding supply is still here. It's still right here. It's still right here. You know why? This SC, this base, everything here, you had a rejection boy breakout. And so price came back to reject what broke it. And that's why you have this rejection, this pullback. And at the same time, you have that right there. So what do you see next? That base becomes a reason for mitigation. And then we have price tapping into it during the coronavirus period. All right. But now the big question is this. This first move made 50%, actually made a pullback. This next one kind of actually made a pullback, and the order flow here is sustained because we now have bullish order flow at this point. Now, just before this area, we do have unmitigated zones. Let's not forget that as one. But at this area, we have order flow kind of continued from around here, just a little bit. Let me check out the weekly so I can see a lot more actually. Let me check out the weekly and be as precise as I can. So this was the last base formed. Right, and I'm gonna call that supply. All right, cool. Now that is supply, right? And then we have a rejection into that area, taking out liquidity, and we're supposed to go bearish, but all of a sudden, this candle shows up, assists bullish moves, and price goes bullish at that point. So that we could say that there is a high probability, right? There is a high probability that price, for some reasons, left liquidity here, because we do have equal lows actually at this point. So we could say that there's a reason why liquidity was created or left right there. And maybe for us to have like the next really nice demand, price needs to drop all the way down here, right? And it is very, very possible, because now looking at what we have right here, right, paying attention to what we have right here, the structure is still bearish. And we wouldn't just say that gold is just going to buy all of a sudden and just go bullish at this point, because this, even if it's a counter trend pullback, it is still bearish and there is no major sign of demand just yet. Love how it will fit together. Thanks, man. So let's go back to the monthly. So this is the same place we're looking at here, right? And for some reasons, this is very, very important. Now, one thing I can say is the fact that this swing, because that's the swing. So first swing, this is the first swing, right? First swing, you never made 50%, so no complex pullback. Next swing, you never made a pullback, 50%. Next swing, never made a pullback. So it is needed, it is quite necessary that we do make a pullback, right? It is quite necessary. And when you look at the monthly time frame, we're actually very bearish. And just this move doesn't just mean that we're now bullish all of a sudden. It doesn't mean so. The only reason why we have this move is majorly because of the fact that this area was previously an holding demand area. Okay. Holding supply rather. So this area was a previous holding supply area. And so for that reason, what took out this holding supply is the reason why price is rejecting and we're having buy show up at this point. So when you check out the weekly, you're going to see the base, right? Now, what was the last base created before we broke out that zone, right? It was this exact base candle, isn't it? So when we pick out this base, we can see how nicely we have buy show up from there all of a sudden, isn't it? And so that's the reason why we're having demand show up at this point. Okay, so you actually know everything that's happening, and so you can just move price however you want to.